The markets reacting to the Federal Reserve and maybe reading the Federal Reserve better than the chairman himself.
The market's done a good job of pricing a Fed on hold.
The market has read patience for pause.
I think that's appropriate.
The pause already has reassured the market to somewhat, and that is not widely expected.
It appears that they're coming around.
We're coming closer to neutral.
The balance sheet is also not on an autopilot.
We're not going to try and repress the economy, and that's essentially what Powell was saying.
Frankly, he is not really sure how he should be communicating.
It's almost as if somebody just grabbed him before and said, hey, look, read this piece of paper. This is what you need to say to make the markets happy.
Joining me around the table here in New York is Steve Wieting, Citigroup Private Bank Global Chief Investment Strategist, Mike Schumacher, Wells Fargo Securities Managing Director and Head of Rate Strategy, and Bloomberg's Lisa Abramowicz joining us as well. Guys, I want to begin with the Chairman Powell flip-flop of the last 3-4 months and just go through each comment by each month and just show how he's reversed pretty much every single one he's made. In October, he said we're a long way from neutral at this point, probably. Then in November, he turned around and emphasised the range of neutral at the Federal Reserve, saying they remain just below the broad range of estimates. The following month, in December, he starts talking about the balance sheet being on autopilot, and then fast forward to last Friday, where he talks about the flexibility of the Federal Reserve, not just on rates, but on the balance sheet as well. How on earth do you understand the chairman at this point, Lisa, when he says something, then backtracks on it a month later?
I think it gives a lot more power to markets. I think it gives a lot more power to traders, because they know if they have enough conviction, he'll come around at some point and he'll join them and edify it, because that's essentially what's happened, right? Stocks sold off. People were saying the U.S. is looking worse than expected, and then he backtracks every time.
Mike Schumacher?
No, I give Powell more credit than that.
Please do, go ahead.
The thing that really has not changed too much is the dots. Yes, the Fed is calling for 2 rate hikes this year versus 3 a little while ago, but when the Fed calls for rate hikes, it delivers. It did it last year. It did it in 2017. You got to watch the dots. Is Powell doing a great job talking to markets or about markets? No. Is he doing a good job talking about monetary policy in general? I think so. The balance sheet's been confusing, though, granted.
So let's talk about the market positioning for 2019 then. The Federal Reserve delivering what they said they would deliver in 2018. The market's saying they're done now. The Federal Reserve says maybe 2 more. I would say after the comments from Friday, he's basically communicated to the market it's the 2016 playbook that's in play, and we don't move again until the markets sound the all clear. Now, if their intention is to go 2 more times, I didn't get that from Friday. Did you?
Disagree. I did get it. And where I did get that was when Powell talked about the data flow. In the very first part of his commentary, he said, look, the data looked pretty good. He talked about non-farm being strong. ISM was weak. He dissed ISM. Who cares about ISM? Not Mr. Powell. So Powell does care about strong data. He focused on that. I think it reinforces the case for a couple more hikes.
Steve Wieting?
That itself is troubling. And in the sense that monetary policy should be negotiable, it should be focused on end private financial conditions and the effect that will have on the economy. Getting lower Treasury yields, for example, is going to do very little for the economy in isolation if credit is weakening. And I think it's very important for them to recognize that you cannot say that you are controlling monetary policy solely with interest rate hikes when you are shrinking your balance sheet. That, again, if you can say that when you've stopped shrinking the balance sheet, and then you can make the case for that. But I think that he communicated badly about this dual tightening that we had back at the last FOMC meeting. Now, I think it's more comforting, in fact, that he is adjusting this and that he is not saying that we're going to be completely blind to this.